The stock market is crashing. It went down, what, like 14.5% last week, and this week it went down 4% one day. It's up like 4.5% today. What do we do when the stock market crashes? What's the difference between a correction and a crash? What the heck happens if the market keeps going down? Do you sell? Do you get out? Do you add in more shares of whatever you're holding? That's what we're going to talk about. My name is Max. Welcome to the Inlight Trading channel on YouTube. We are a group of professional trading mentors to help bring you to your next level of trading, even if you're at a level 0. Welcome to the Inlight Trading channel. This is a new style of video I want to try out where I just sit here in this pretend setup. I don't actually use this low of a desk normally. This is just a little awkward. Don't forget to hit that like button. Hit that subscribe button down there. I can't even see my monitor. Where am I pointing? Am I in frame? It's down there somewhere. And then there's like this bell that if you click it, I don't know if it makes a ding noise. I've never actually turned it on for anybody. I'm a hypocrite. Click that subscribe button and the notification bell that appears next to it if you're not already subscribed. If you are, you should have that notification bell hit. All right, let's get into things. Starting off with a correction versus a crash. Now, a correction is anything between 10% and 20% of a drop. This is what most financial analysts consider a correction. Anything less than 10% of a drop, but more than 1%, more than like 1 to 3% is considered a dip, a sell-off, something like that. Like that's anything more than a 1% drop is significant in the overall stock market. And then anything below 20%, that's considered a crash. And then when does a crash turn into a recession? A recession is if the GDP decreases in 2 consecutive quarters, then that is considered by financial analysts as a recession. So right now we're still in a very strong bull market. The market only dipped down to the lows around 14-15%, not that 20% mark, so it's still just a correction, which a correction means, hey, this market has gone up too far, needs to have a little healthy pullback, because what goes up must come down, right? So people's greed grows and grows and grows and grows and grows until they get too greedy and emotions are too much at stake. You need to let off some steam, get that nice 10 to 20% correction, and then continue back up. That's ideal. So no, the market has not actually crashed. Don't listen to the headlines. Is it possible? Yes, the coronavirus is killing people. It's spreading, but be careful because a lot of news is coming out saying that we're going into a recession, we're going into a crash. It's possible, yes, but it's not a guarantee. So instead, you should be taking measures to manage your finances in a way that even if it goes into a recession, you'll be fine. And if it doesn't, you'll be fine. You see, the key to maximizing profits is not buying at the bottom and selling at the top. Of course, that sounds wonderful, but that is way disproportional to the reality of the stock market. You're never going to buy the exact penny at the bottom and sell the exact penny at the top. It's just impossible. It's never going to happen. Not even the world's best algorithms can make that happen. So what you can do is 1, time diversification. In moments like these, and even in a bull market, if you are diversifying your investments, not just in different index funds in a ton of different individual stocks, I'm sure you're familiar with the term diversification. It means you are spreading your resources thin, not putting all of your eggs in one basket. You can also do this through time. And this is where you put in a regular amount of money. Let's say it's $200. You put $200, or you could say like 10% of your income, something like that. You can put a regular amount into your investment account, into your diversified investments, index funds, mutual funds, individual stocks that you're speculating on, what have you. And each month or each quarter at regular intervals in time that you set for yourself, regular price, regular intervals of time, you add money to your investments. And what that does is you're consistently adding money at different periods. So even if the market goes up, you add money. If the market goes down, you add money over time instead of putting all of your money in the stock market at once. Because then if it goes down, everything is being affected by that. But if it's just a little bit at a time, then all those little ups and downs, they just get smoothed out. So time diversification can help you in situations like this. Number 2 is don't panic. Please don't panic. If you are a long-term investor, then you're fine. You're fine. If you look at the chart of the overall stock market, every recession we've gone to, you stretch it out, it still looks like a pretty straight up line going to that top right corner of the screen. So you'll be okay. This too will smooth out. Even if the market continues to go down, even if we go down more than 20% into a crash, even if we go into a bear market, you'll still be fine. Just hold on and keep riding this wave, because the wave will go back up eventually. That's the point of the stock market. The point of life is to keep growing and improving and moving forward and up. But if you are a day trader, still don't panic. If you're a day trader, then you could take advantage of these upticks and downticks and this plus 4% in the S&P 500 and down 4% in the S&P 500, plus 8, down 8. Such a volatile market currently that you need to be capitalizing on these moves if you want to really utilize your time as a day trader. When the market goes sideways, a day trader doesn't really make much money. But you can make money if the market goes up or if it goes down if you're day trading, because you can short a stock and it goes down. You could buy a put and it can go down. You could sell a call and it can go down, and you make money in all of these cases. So even if the market goes down and you are day trading smart, wise, consistently, sticking to your rules, you're being disciplined, you can make money whether the market goes down or up. Just don't panic. Don't trade with emotion. If you need help with any of this, with trading without emotions, trading like a machine, trading no matter how high up the market goes, no matter how low the market goes, managing your money in these short-term circumstances, then just text me or visit our website, inlighttrading.com, or head to our Instagram page or any of our social channels at Inlight Trading. And we will help you. We will hook you up with a mentor. We'll hook you up with a consultation. You can talk to me for an hour. We can get you through whatever. We're here to help. We're here to educate. We hate seeing people lose money in the stock market, especially to scam educators out there. What we love more than anything is seeing you succeed. So give me a text and I'll help you out. The last step to surviving a market like this that I want to discuss is to learn how to sit on your hands. You have 3 options as a trader: to buy, sell, or do nothing. So many people forget this third one, that it's okay to do nothing. They think that they need to maximize every second of the market. All these numbers are going around. They need to catch them out of thin air and create trades out of them as if trade opportunities even exist. They force trade opportunities in charts that aren't showing any trade opportunities. They're just forcing it and forcing it and forcing it. Seriously, learn how to sit on your hands. Don't force a trade that isn't there. You will lose money. It's not worth it. Sit on your hands. Watch the charts. If the charts are too volatile for you, stocks are too volatile for you and for your risk comfort, then just sit back. It's okay. You don't have to force a trade all the time. Just make sure that when you make a trade, it's a good one. That's what matters, and that's what makes you successful as a trader. Well, that's it for this video. Thank you so much for watching. Please subscribe to this channel. Seriously, we are going to put so much educational, high quality content out there for you. I'm supposed to be moving to Italy in a week as well. Italy, South Africa. I have all these big moves, big travel plans coming up. We'll see what happens with the coronavirus. But if you want to stay tuned to my journey as I show you how to live a life as a day trader, moving to all these amazing countries, these amazing places, living in Rome, living in Cape Town, wherever the world takes me. If you want to follow that journey, seriously, subscribe to this channel. This is just the beginning. You are lucky to be here right now with the opportunity to see all this great content that's about to come out. So thank you so much for watching, and please, please, please trade smart. Again, my name is Max. This is Inlight Trading. Thank you so much for watching. Have a wonderful day, have a wonderful week, have a wonderful weekend whenever you're watching this. Enjoy your breakfast, enjoy your dinner, enjoy your drive home if you're watching this illegally while driving your car. There's a mirror over there, so I get to laugh at myself. It's kind of fun. This is weird. So I'm not used to talking to a camera. I'm always on the other side. I spent 7 years in the film industry, filming, doing videography, director of photography, cinematography. I spent a few film sets as a DP, grip to a PA, gaffing, key gaffer, and it's all sorts of stuff. There's a lot of tiers that you work your way up in the film industry when you're working on movie sets, but I'm so used to working behind the camera that I almost feel like it's extra awkward working in front of the camera because I want to jump over there and see if the shot's lined up, see if I'm in focus, but there's nobody over there to do that. It's kind of weird. I'm using an 85mm lens, which if you know anything about cameras, that means my camera is way the heck away from me. So one tip that I'm aware of for YouTubers and stuff is to talk to the lens as if it's a person, like try to pretend that it's a person. It's hard to pretend that I'm talking to a person who's on the other side of my apartment. And we went over a year, I believe, without a 1% drop, and then it happened. That doesn't even matter for this video. This screw on the door is coming undone. What is going on? No. Anyways, where were we? Yeah, so I got this Oura ring a couple months ago. I haven't been sleeping well. Found out I only get like 8 to 10% REM sleep a night, which means I'm not getting very restful sleep. Also not using the creative side of my brain, my subconscious, but that's a little sciencey for this video. Learn how to sit on your hands.